Welcome to the Stage Analysis Members Weekend video. We're going to do a special feature to start tonight on gold and silver and the gold and silver miners of interest this week. As you can see from the gold chart at the moment, it's in an interesting spot at the moment. We're a reversal back through the 30-week moving average this week, and a strong outside day on Friday on the daily chart in gold, so which obviously affected the miners with multiple undercut and rally spring type action type moves in the miners. So I just want to have a look through that and obviously focus on what's going on there at the moment. And then we'll get into the major indexes, the industry group relative strength rankings, the IBD industry group bell curve with the bullish percent for that, and then the market breadth charts to sort out what's going on with the weight of evidence at the moment, before finishing off with Bitcoin and Ethereum as their attempt to make stage 4 continuation breakdowns over the weekend at the moment. So I thought that'd be a good way to finish tonight. It's and a little bit of crypto breadth as well, which I haven't done for a while, which still is lingering at very, very low levels. So we'll get into that a little bit later in the members content portion of the video. But to start tonight in part 1 of the video, we're going to focus on what's going on in the gold and silver miners, and starting off with what's going on in gold itself here. So using the GLD ETF on the weekly chart here for this chart, but you can also use on the daily chart. I'll show you the continuous contract. You could also use the PHYS physical gold ETF as well. They're all pretty similar in terms of in the look and feel. So the stage analysis is obviously identical on all of them, but I marked up the GLD a long time ago, and it's the one that gets the heaviest volume in terms of the ETFs. So it's a good proxy to use if you are trading gold. I know obviously a lot of people are heavily say you should only trade the physical. So you can trade physical gold itself or use the physical ETF. Is obviously another way to trade it if you are interested in trading gold at all. At the moment, we're potentially still stuck in stage 3. We were building a stage 1 base, but after the stage 2 breakout, rolled over and formed an upthrust after distribution and test and pulled back into the range, it potentially reverted this current range that we're in at the moment. So the major stage 1 base that we've been forming for a while now, back into potentially stage 3 after an upthrust type move into the buying climax back in the late stage 2 in mid 2020. But at the moment, we're potentially now setting up for a further attempt at making a new breakout attempt. So we could potentially move back into stage 2 again. So it doesn't really matter whether it's stage 1 or stage 3 at the moment. We're basically within a sideways range and forming up potentially for a new attempt at a breakout. So you can see from the relative strength versus the S&P 500, it's made a higher high ahead of the price action at the moment, and what we call the zero line, which is the 52-week RSMA of gold versus the S&P 500, which is this blue line here. So you see this is the 52-week RSMA. So that is as you can see, it's just starting to turn up at the moment. So any kind of breakout that we got here ahead of this would potentially be a good quality breakout, as you want to see that in terms of the relative strength here, is you want to see the relative strength leading ahead of the price action when you get a breakout, ideally, and you want to see it above a rising zero line. When you get a breakout below a declining zero line still, or just as it's starting to flatten, then they do often fail. And as we got with this one, it did manage a couple of months above the range, so it actually started to break out into stage 2 around here. So did manage to hold in stage 2 for a few months, but topped out at the previous high just underneath that and formed a local upthrust and test pattern, and then dropped lower again back into the range. So if we drop down onto the daily time frame on this, you can see what's going on a bit more clearly on the near term. So Friday's price action, we had this big outside day bar, so some strong price action. We've had a few in the last couple of weeks where we had a few strong moves, a little bit of spring type action earlier within this range, but this has basically been going on for 3 weeks or so now. So I think we've got 12 periods there or so. So just under 3 weeks with this horizontal structure that has been forming on the intraday time frame there. But you can see on Friday there was a strong volume move. Relative strength has moved to new highs ahead of what's going on in the price structure here. Still below the declining 50-day moving average here. So at this point here, still needs to get back through the 1186 level there to move above the 50-day moving average. But you can see the plus one ATR level is just underneath where we are currently. So that's at 1883.56 on the continuous contract chart here. So a move up through here and out of the range potentially would be a change of behavior type move. So we're looking for this kind of price action where we can get a change of behavior and a move out of this declining channel that we're in at the moment. So which obviously topped out back in early March time here with a short-term buying climax, and then automatic reaction and a secondary test. And then I've highlighted a local up thrust within the range here. So it formed a declining channel, so not showing much in the way of strength in the near term there. But we've had a spring and test pattern at the bottom of the channel here. So you don't always get these form in horizontal ranges. So you can obviously get horizontal range and get this kind of price action form quite happily. And you have your buying climax, move up into the range, and then come back down and chop around in the range before moving up and out again. But you can obviously, ranges can form in multiple ways, and sometimes you can get obviously advancing channels or declining channels. So with a declining channel, it generally tends to highlight more weakness in the stock or the asset class in terms of gold. So at the moment, the fact that we're starting to tighten up a little bit within here, we need to see that change of behavior to highlight that it actually broken this trend. But the relative strength outperforming and the strong volume is a good sign that it could potentially make the attempt breakout from here. So if we look at silver, it's a little bit weaker in terms of what we've seen in gold. The price structure when gold broke out into stage 2 was much less well defined. It was a very small structure at the time, and so it didn't make much progress compared to gold and formed a similar pattern with an upthrust after distribution and test back in March, April time. Now it's had a little bit of spring type action at the bottom of the range again and has moved back up into the peak liquidity zone in here. So potentially this could still roll over here. If it does roll over at this point, then we could obviously move off into a more serious stage 4 decline. However, at the moment, with the strong move we're seeing in gold there, silver tends to correlate very well with gold. So be looking for a near-term break out through this local liquidity area here, and then potentially to hold that and start to move back out of its declining channel that it's been in. So again, if we drop down to the daily time frame on this one, you can see this is the SLV. So again, not the physical ETF. You can use it's PSLV, I believe, is the physical ETF in the US. So you can use that, or obviously physical silver itself through obviously different things like Bullion Vault and other trading other services basically. So as you can see, similar sort of action as the gold, but nowhere near in terms of the volume on this one. You need to see obviously a move up and out through this local pivot here and the 21-day moving average. But you can see the structure that's been forming here. Got a little bit of a Wyckoff structure going on. You've got your local selling climax, automatic rally, secondary test, a little bit of an upthrust in the range here, a little upthrust after distribution and test and roll over and fell back into the range. But now we've got some spring type action at the bottom of the range, and potentially this is forming a higher low test in here if it can see a break back up and out of this kind of area that could potentially then take it back up towards the 200-day and the 50-day moving average in here, which would be the next levels of interest in terms of the moving averages there. So you see relative strength has been fairly in line with what's going on in the S&P 500 at the moment here. So if we go back to the weekly time frame here, you can see the relative strength line here. This has been obviously chopping around the 0 line. So on the old Mansfield chart, this would look like a much flatter line, and then potentially we're just starting to outperform that a little bit. But you can see the 0 line is still declining, so it's still less than ideal. As I said, with the gold one, you can see the 0 line is actually flattened out and then starting to turn up a little bit here. So showing much better relative strength in gold than we are seeing in silver at the moment. But potentially we could be looking for some short-term moves back up towards the key moving averages in some of these, as you can see in the individual stocks. So if we drop down again to the actual mining ETFs on these, so the gold and the silver mining ETFs first before we look at some individual stocks. This is the GDX, which makes up some of the major gold miners in the US. You can see we had this engulfing candle on Friday on some stronger volume. So looking for this to break up through the 200-day moving average and then start to hold above in this upper range here. So potentially, which could then start to turn it back to the upside again and a little bit more positive. You can see the 3 ATR candles here. It's still underneath, just under that 21-day moving average there. But relative strength is outperforming the S&P 500 still. If we move on to the GDXJ, similar sort of behavior. You can see it's undercut this, got the same kind of price structure that we saw on the silver. But again, spring type action at the bottom of the range, potentially with the reversal engulfing bar on Friday. This could form a last point of supply here or a high low test. So be looking for a break through some near-term pivots here, or potentially you've got a little bit of a downtrend channel here. It's fairly sharp low. So you could potentially start to break up through here. Then next resistance, you can see this cluster of moving averages starting to form here. So potentially that's could start to form an area of resistance if it does move up into there in the short term. Again, silver, similar kind of behavior, engulfing bar, still below declining 50-day and 200-day moving average in the silver miner ETF low. So we go into the weekly chart on this. You can see it's in stage 4 at the moment, so not obviously in brilliant shape here. Multiple breaks to the downside, so still under resistance at the moment. So this needs to start to break back up through some near-term structures here, back above the 30-week moving average, and start to hold for a potential move higher there. If it can't, it starts to roll over here again. You start to get this kind of behavior. You could obviously make a stage 4 continuation, break down to new lows. But like I said, at the moment, looking at it for a short-term bounce, see if it can actually start to move back through these declining moving averages at the moment. But obviously much weaker in terms of relative strength in the silver stocks compared to the gold stocks, of which are showing much greater relative strength. Silver juniors, very similar kind of behavior there, closed above its 21-day, a little bit of an undercut and rally move on Friday. Let's see, breaking through the lows here, so spring and a higher low test potentially. So again, got declining channel line there that it's just testing. Right, let's move on to the individual stocks in the group. So I went through the gold miners and picked out a few of interest. AUY is actually getting bought out by GFI Goldfields, so I believe it's going to increase the amount of Goldfields silver in terms of when they buy AUY. So, but at the moment that's potentially not going through until later in the year. So both are still tradable at the moment. Goldfields has suffered because of it, but it was the strongest mover on Friday. Look at AEM here, similar sort of behavior that we saw in gold itself. So engulfing candle on Friday, strong move back above the 200-day moving average just. So a little bit of near-term resistance to work for on this one. Looking for, but you can see local kind of structures that this has been forming after that strong move out in March that then has fallen over again. Scroll down. So AG, one of the silver names. So again, engulfing candle on Friday. It's got a little bit more work to do with the silver names, as we saw with the mining ETF there. Still in stage 4, but forming a little bit of a lower base structure down here. You can see potentially a bear flag, but starting to move back up and out with a little bit of spring type action in here. So we'll see if this can start to pop back out to the upside. If it can't, start to roll back over there, then potentially the bear flag could resolve to the downside. You could start to see a break. If you start to see a break back down below there, then potentially could make a test back for the lows again on that one. 50-day moving average on Friday for AGI. It went back through after testing the 200-day. So massive engulfing candle on that one, some strong relative volume again. Again, you can see the broader structure on this one. If we zoom in onto the charts, go into the the weekly here. It's got a really, really large base structure that's been developing over the last year or so. So still within that, you need to see some strong moves back up towards the top of the range, and then a break back above 9.5 to potentially move it back into stage 2 there. You can see on the near term, we're going to the 3 ATR candles, just closed around the 1 ATR level on Friday, so not quite in a short-term uptrend yet. Needs a little bit more work, so potentially could move up into near-term resistance, and then you'd want to see some VCP type action and continue on to the upside with the moving averages starting to get back in order on this. So AUY, as I said, this one's a merger stock, so potentially going to go off the radar at some point in the near future. So ideally not the best vehicle to trade in that regard. Still having some strong moves. So a big engulfing bar again on Friday, back through the 50-day moving average and showing strong relative strength versus the S&P 500, as you can see with a higher high there when the price action is obviously making a much lower level at the moment. So definitely relative strength in the near term in that one. BVN, again, engulfing candle on strong relative volume on Friday. Relative strength is nowhere near what we just saw in AUY there. It dropped down to the weekly here. See, it's potentially back in stage 1 here. It's a sloppy, attempted to make an early breakout into stage 2 around this level in here. So broke out into stage 2 and rolled back over again, stopped out the stage 2 breakout there. So an investor stop would have been around this kind of level here. So it's stopped out and then rolled back over again and pulled back into the range. So potentially could set up again for a new breakout. So if you start to see it move back out through the near-term level in here, then potentially could start to move up and out again and start to form up in stage 2 once more. But a lot of overhead resistance in that one. EGO, got an undercut and rally move there on Friday. So good, easy entry point on those kind of ones when it does that. So you've got a little bit of a lower base structure. So looking for a break to the upside that then holds the range, potentially could then go on to test the 200-day and the 50 days start to turn up in there. So EKX, another one of the silvers, again strong volume on Friday, moving up towards the 50-day. Again, a little bit of local spring type action in here at the moment. So moving up from a spring and higher low tests. So still making higher lows at the moment. Attempting to break out of this lower structure, but still under declining moving averages. FMV, big engulfing bar on Friday once more. Strong volume, relative strength. Not quite there yet, but definitely much better than what we're seeing in the price action. So price is obviously down here compared to these levels. Relative strength's only got a little way to go by comparison in terms of what's going on there. So definitely outperforming in relative strength. So we'd be looking for a near-term break, this level in here, and start to get back through that 50-day moving average there, and start to hold above. So we'll start to see it hold above that 50-day moving average. FSM, another one of the silver miners, starting to move back through its zero line here on the relative strength. You can see it's been underperforming the S&P 500 for a long time now, but starting to show a little bit of relative strength in the near term here with the move off of the low in mid-May there, but still underneath these declining moving averages at the moment. So relative strength wise, it's much weaker. You can see on the weekly chart here the stage 1 range starting to develop in this. So starting to move back into stage 1 around this area here in February, but you draw your base structure from the selling climax to the automatic rally level. So here to here, starting to form a base structure, a little bit of spring type action in here. So still got a ways to go to get to a stage 2 breakout point back up here, just under the 5 level there. You've got this strong resistance level here from this November bar where it started to break down within stage 4 there. See obviously the original stage 4 breakdown area over here. So it failed back at the stage 4 breakdown test, and that's formed a strong area of resistance at the moment. So we need to start to see this form up in the upper part of the range here, start to form in the later part of stage 1, potential Wyckoff entry zones within there, and then obviously move back out into stage 2 again. You can see relative strength versus the S&P 500, just approaching the zero line here, which is potentially starting to flatten out. So we need to see this start to hold above and start to move back out again, start to show a little bit more relative strength in the near term there.